So in the overnight session, for the most part, the market has been balancing in the lower part of yesterday's range, and now heading into the open, our intermediate term bias will continue to be bearish, but our short term bias is now going to be neutral, which means we need to be more flexible and open to the market moving in either direction and be much more mindful of the real-time intraday situation. Because anytime our short-term bias is neutral, the intraday bias takes its place. And how the market behaves at the 57.65 to 74 initial resistance, which we're also using as the intraday bull bear zone, is going to help us determine which side is now in control. If the weakness from yesterday is going to remain in play, then sellers need to hold ES below 57.65 to 74, and a break and hold above that area would serve as an intraday bullish indication, and that can then result in a test of 57.80 to 85 and then we have the bias confirming zone at 57.8975 to 5800.75, where there is going to be a higher probability for sellers to step back in. And from there, as long as buyers hold ES above 57.65 to 74, we have to assume that the buy side is more dominant on the day time frame, and ES would need to break back below 57.65 in order for that situation to change. Now, in order for the bullish scenario to play out, ES will first need to take out 57.65 to 74. As long as the market is holding below that area, the sell side will still have potential to retain the control from yesterday. But then in order for us to get that intraday bearish indication, ES needs to break down below 57.39 to 45. So a break and hold below 57.39 would serve as an intraday bearish indication. And then in order for us to get that intraday bearish confirmation, ES will also need to break and then hold below 57.22 to 32.5 on signs of initiative selling. So in order for the recent weakness to continue, the sell side needs to take out 57.39 to 45 and initial support at 57.22 to 32.5, and the market needs to break and hold below that area on broad market weakness and sustained downside momentum in order for us to get that intraday bearish confirmation, and that can then lead to a test of 57.10 to 16, where buyers may still be active, but of course, because the sell side will be dominant, we will need to assess the real-time intraday situation to determine whether it's still worthwhile to go long there, and a break below 57.10 would just further cement the bearish view and bias on the day, and from there ES can head into the support areas below, and the lower the market pushes, the higher the odds of buyers stepping in. And on the downside, the next significant area of support is down at 56.49 to 59. That also marks the range extreme, so buyers are very likely to be active there, especially on first test. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the pre-market and initial resistance zone on the upside, and the pre-market and initial support zone on the downside. And then just keep in mind that with our short-term bias being neutral, we will need to be more flexible and nimble, and the intraday bias is going to be much more significant. So that is the plan heading into the open. Let's see how the market behaves at the pre-market and initial support, as well as the pre-market and initial resistance zone. That will help us determine our intraday bias, and we'll take it from there.